Yes, hello smart money traders. Welcome back again to this Rambo KE, and today I want to talk about a very crucial concept of the smart money. Guys, alright, this is a very important concept. It's very crucial and it's very wise for traders to understand how this concept works, alright? This is a safe concept, you can drive your strategy from it, alright? So it's basically something that you can work on and rely on as your own strategy, right? So that when you come to your charts, you look for it, and when it represents itself at the right time, at the right conditions, then you execute your trade, alright? So it's the candle range theory concept, and without wasting time, let's see what it has to offer, alright? As I said, it's a very significant concept, and it's very wise for us to understand it, right? There are many strategies out there to make money in the market, so this is one of them. So if it doesn't align with you, just let it be, and you'll find something that aligns with you, right? But when you find it very significant and it aligns with you, you understand it better, you can drive your strategy from this concept. So not say candle range theory, alright? Candle range theory is what we call CRT in a short form. CRT in full is candle range theory, alright? It's just a simple way of using one candle to predict where price may go next, alright? I hope you can see this my cursor. It's just a way of using one candle to predict where the price may go next, alright? So forex trading is just a game of probability. You are never sure of what price intends to do. You just have to place yourself in a position where that the probability of your price playing out as you anticipate it are higher than when it goes against you. So every candle has a high and a low, right? So what makes a complete candle is just the wick, the body, alright? So the wick represents the highest point price went at that particular point, alright? And we have two wicks, alright? The wicks are these guys, right? These like sticks. That is what they are called, the wick. So we have the high wick and the low, right? There are two. The low, it just tells us the lowest price went during that time. This one candle can be representing 1 minute, 1 hour, 1 daily, weekly, H4, it doesn't matter. But what you have to understand is that this week, this low week that went, it tells us that the sellers, let's say it is a selling candle, it tells us that sellers pushed price up to this price level, right? This was the last price that sellers pushed price into, right? Let's say it's a selling, or let's say it's a buying candle, right? So this where the sellers pushed price into the last price that sellers tried to push into, but suddenly we have buyers coming, pushed price up, and this was the last highest price that the buyers pushed that price in that 1 hour or H4 or weekly candle. This was the highest price they reached, right, for buyers, and then we can have it closing within this range, right? This was the highest, but then later price closed a little bit lower, right? So we call this the highest price and the lowest price that happened in the market at that duration, alright? So these 2 points create the candles range, alright? So between the highest price range and the lowest price range that a candle went in that particular time, right? As we have said, you can be using 1 hour, H4, whichever time frame. Between now your highest price and your lowest price, in between is what we call a candle range, alright? It's what we call a candle range. And how can you know this is the highest and this is the lowest that price went to on that particular time? By just observing these your wicks, right? This is your lowest wick and this is your highest wick. The wick tells you the highest price went in that particular time. So how can we utilize now this concept of candle range theory? Now we have seen how it forms and what it means. Charity or candle range teaches us to watch what price does around that range. As we have said, we have this as our highest point that price went to, and this being our lowest point that the price went to. And we said anything between our highest point and lowest point is our candle range. Now our work is to watch what price does around that range. I want us to look at this simple idea. Price takes one side of the candle's range and then may move towards the other side. Alright, that's the whole concept of candle range. Price may tend to take out this highest price range that price went to, push up, telling us that the buyers trying to push price up to make price expensive, but then suddenly we have sellers coming in and rejecting this highest price. Right, this was the highest price that price went to, rejecting it and making sure push price lower. Alright, so making price cheaper. Up to this point, this was the last. Alright, this was the last down. This lower wick. Right, I don't know what happened to my cursor. Doesn't point like it should be. So this lowest wick is where the sellers put the price into, and then suddenly we have price moving in and closing within the range. Right, so price takes one side of the candle's range, and then we may wanna see price move towards the other side. Alright, for example, if price takes the high of a candle, we watch to see if it will reverse to move toward the low. Alright, so as I've said, this wick tells us the sign of rejection. Right, as we say, this is the highest price that went to buyers, and the buyers also wanted to push price higher, but when it reached this highest point, now this is the highest price that price went to, the sellers rejected that. They said, no, we are not going to continue to buy from this highest point. This is very expensive. We want to see price come a little bit lower, and that's why we have them pushing price lower up to this last week. And then they said, this more much discounted, alright, and then we have price closing within that range, alright. So that by understanding that concept alone, it helps you to create the foundation of this concept of candle range. Alright, it's built by understanding the range between one candle, that highest price and the lowest price that price went to in that particular time. And we have said we have different time. We have 1 hour, 4 hour, whichever, as long as you identify your candle range. Later on, we'll see what makes a candle range more powerful and have more profitability. Alright, so we have two types of candle range theory, right? That's CRT. As a normal smart money concept, right? We have majorly we trade two markets, that's a bullish and a bearish. So we wanna see us having a bullish CRT and a bearish CRT. Alright. In a bullish CRT, let's focus on this one, right there. On a bullish CRT, this is our bearish candle. Price was moving down. Alright. This was the highest price that the buyers tried to push price into, but sellers said no, we are going down. And this is the lowest point that sellers pushed the price to, and buyers said no, let's close within the range. Alright, so we have this as our candle range low, and this as our candle high. Alright, and this as our candle low. Alright, for a bullish CRT, price goes below the candle. Alright, the next candle now, we have what you do, just mark your lowest price as your candle range low and your highest price as your candle range high. Now we want to wait to see what the next candle will do. Alright, now if price goes below the candle as it did this point, right, this was our last price low, candle range low, price went below, right, cleared this previous price low that was the last price, clears the low, reverses. Alright, this was the last price that sellers pushed price into, and the buyers were like, no, that's more cheap, we're not going to make profit, that's more cheaper, let's push price to be a little bit expensive so that can make sense in the market. No, this was the last price, and then we see price how buyers came in and rejected this price below here and closed inside. I want you to know that I've said and closed inside our first price low, our first CLT low. Alright, this middle candle must close inside. Right, moves up. The only thing to make it easy for remembrance, you want to see this next candle clearing our first candle range low. Alright, for it to qualify as a bullish CLT. So next, what we want to expect to see, if this, you come to your chart and see this, what you want to see is that you want to see how price will move and take this candle range high. Alright, candle range, the highest price that the price went when it was forming this candle range. Alright, we'll come to a point that we will look at how to trace that move up to this point. Now for a bearish CLT is also the same thing, but in an opposite direction. Alright, in this case we want to see price take the high, alright, push high much higher, but then we have sellers rejecting that highest price, saying, you know, this is too expensive, let's just push price to be relatively cheaper, and we have this candle closing inside our candle range high. Alright, so in this case, when this forms, we want to see how these sellers will continue to push price and take this candle range low. Alright, so in a bearish market, we only want to utilize candle range, that's bearish CLT, and in a bullish market, we want to utilize bullish CLT. Alright, it's just basic knowledge, you know why I'm saying that. Alright, so what makes a high probability CLT? Alright, this is where I want us to stop from, and then next we'll look on more details information. Alright, so what makes a high probability CRT, a high probability candle range theory? Alright, a high probability candle range theory is forms the liquidity is swept first. Alright, as we have said, we want to see price sweeping liquidity. In a bullish CLT, we want to see price, alright, the next candle sweeping our CLT candle range low or our CLT low, alright, and then close inside. If it sweeps and it closes outside this our CLT low, then we have that as a low probability. We want to see it closing within the range, inside the range, and we said our range is between this highest wick and this lowest wick. We want it to close inside, then we can say it as a high probability. Alright, and this candle should close bullish as it is right there, closes, but the candle closes bullish, showing buyers have taken control. Alright, I say that the reason why we are having this long wick and the price closing inside is because buyers rejected this price, this lowest price. Right, the buyers rejected it and they said, no, let's buy from there. We are now moving in too much discounted level. Right, so that's what makes a high probability CLT. Low probability CLT, the liquidity is swept, yes, but the candle closes bullish. Right, no, not bullish, but I meant to say bearish. Right, because this is a bearish candle and it should be bearish, showing buyers have taken control. Alright, so also the same thing when it comes to bearish CLT. Want to see price take the CLT high, close inside, showing that buyers rejected its highest price. Alright, the buyers who are buying, not buyers but sellers. The buyers were trying to push price higher, but sellers came in and rejected this highest price and made sure that this candle closes within the range. Alright, that action of sellers rejecting the highest price and making sure that this candle closes within the range, it can indicate a high probability CLT. Alright, so the first thing, you have to identify your candle range high and your candle range low. Second, you want to see price taking either the high and closing inside or the low and closing inside. Alright, and you wanna see the shift in the market participants. Alright, like this point. This was sellers, the black candle represents selling. So the sellers, the candle range was formed through sellers. But you see this candle range, this now that swept liquidity. This swept liquidity made sure that it has closed bullish. Alright, showing that the buyers are taking control. Also in this case, this was a bullish market. Our candle range high and our candle range low was formed through buyers. But then sellers made sure that this candle that swept the high have closed bearish, like a sell candle. And this closed bullish as a buy candle. That tells us that the sellers have taken control of the market and they will move price down to take our candle range low. Alright, so that's the first idea about candle range theory. Right, later on we'll look at more examples. Alright, and then we'll see how to trade with CRT. Right, like what should we incorporate with this concept for it to make a trade. Alright, but for starters, we have to understand what is a CRT and how it works and why it forms and where it forms and what makes it high probability CRT. Alright, so that's it for now. See you in the next video as we dive in much into it. Alright, you are always one trade away. Sign on.